Hey guys, what is up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla stock. Let's go over what is happening in the market, what we can expect moving forward for, well, Tesla in general. Again, I want to make this something very clear. Don't forget, this is a shorter week. Tomorrow is kind of the last day, if you will, of the week, because Thursday is the market's completely closed and Friday is only a half day. The market actually closes at 1 p.m. Eastern time. So tomorrow's kind of the last full day, really. So just keep that in mind moving forward, just in case, it might affect your trades or whatever, or anything like that at all. But with that being said and done, let's jump into it. If you enjoy, please don't forget to hit that like button. This is not financial advice. I am not a financial advisor. And of course, if you enjoy my analysis, though, I do have a membership section where I share my technical analysis and thoughts on the charts, etc. Every single day the market is open. The link is down below for just $3 a month. Obviously, I mainly focus on Tesla in terms of updates, but I also share other stocks as well, like for instance, AMD, Intel, and well, NVIDIA. I have another tier for NVIDIA, or like, other stocks that I find essentially throughout the day and throughout trading. One of the best ones I shared recently was Pepsi, actually, which did really well. Pretty much sniped the bottom, actually, which was really good to see. Disney, for instance, obviously did phenomenally well. I shared it all the way back here. Obviously, it's been doing pretty well. I sold too early as usual, but it is what it is. $3 a month, or for $5, access to all that, plus NVIDIA daily updates. But jumping into it, Tesla closing the day down only about 0.11% on the day, closing at $338 per share, which compared to the market is going to be a slight underperformance, but nothing too, too crazy, let's just say that. But the day is a little bit questionable. So there are some signs that I like and some signs that I don't like, but Tesla's kind of sandwiched in between two very crucial levels, and it really just comes down to which level is going to give first. So let's go to the 1 hour chart, really quickly here. Let me remove these bands for now. Let's just look strictly at the chart. So Tesla actually closed with the decent looking final hour, right? Nice looking decent final hour on the day, which isn't looking too shabby. But the main thing I'd want to watch out for, you can see on the 1 hour, is, well, we had this obvious, remember, rising triangle pattern. Well, that's obviously been invalidated, but essentially what we did was, we ended up breaking out, coming back, turning into support, but then breaking back under. And then today we actually came back up and retested this range once again, and unfortunately it has turned back into a now resistance. So it went from resistance to support, well, now to resistance. So the problem is we need to break that, right? The bulls definitely want to be breaking above this rough, like 347-ish range. Like, you want to start closing at least 1 hour candles above that range in order for the bulls to really, solidify some form of lead, or continue the lead, I guess I should say. I mean, they have solidified the lead, to continue the lead and to, push us up even higher, right? That needs to happen. That needs to re-happen essentially once again, or else, there is a potential theory that this not only can be, obviously an overall, obviously from down here, a double top pattern like this, but you can also make an argument that we may be also setting up a bit of a head and shoulders pattern on the 1 hour as well. So, the bulls definitely need to start breaking past this 347 to, honestly, maybe even as high as 350 to be safe range for some of these patterns to get invalidated. And then, of course, also you really want to break past really 360 and start closing above 360 to invalidate the double top. Those are very important patterns to invalidate. And until they're, of course, invalidated, well, they potentially remain a threat, right? A threat to the bullish thesis. So those need to be broken for the bulls, and you need to get past those ranges. Now, that's kind of the very rough 1 hour analysis. Now, if I bring over, for instance, the market bias and the, not the bands here just yet, we'll talk about the bands in a bit. This one here. All right, so if I bring out these two bands, right, I have like 3 different bands I use. These 2 bands, I use them synonymously, not synonymously, together, synonymously. I use them together essentially because they both essentially say the same thing, right? Trend. Is a trend up or is it down, essentially, right? And unfortunately, when they're both red, that's not ideal. For instance, you can see when they were both red here, we had some issues, and then they both turned green, and then look at this. We've just been rallying and looking pretty nice for the most part until now. Of course, we broke down below, and you can see that they are both, of course, naturally red. So that's not ideal, right? That to me tells me that again, the short-term bullish thesis is definitely weakening here, right? It's definitely weakening, and it's definitely having a little bit of issues for the most part. So the bulls really need to start stepping in sooner than later, in my, of course, opinion. So watch for that. Now, with that being said, though, Tesla did get a little bit of a bounce from the 1 hour being into the oversold territories. We went from the overbought territories on the 1 hour here into now we actually just kind of dipped our toes into oversold territories on the bands and getting a nice little quick bounce, right? So again, I wouldn't be surprised if Tesla gets one more bounce up higher, up until this mid 340s range. That wouldn't fully shock me, but again, that level needs to break. It is extremely crucial to break, but again, there is going to be a lot of resistance, just the horizontal resistance, the market bias resistance. We of course will have this band, or essentially, well, the band I showed earlier, the smaller one, which is, where the hell is it, man? This one, it's essentially the 8 and the 21 EMA, right? The bottom line now, of course, will be the 8 EMA. So for instance, I can show you it like this. It might be a little bit easier. You can see, right? There's lines up pretty well. 8 EMA is the bottom one now, and the 21 EMA is the red one above it, right? Obviously 8 EMA cross below the 21 EMA. Well, that's bearish, right? It's a bearish crossover. So that's something to watch out for moving forward as well into, tomorrow and really the rest of the week. So you really want to be breaking above this resistance point. But again, unfortunately, that is going to start acting as a pretty decent resistance for Tesla for now. So watch for that moving forward. That's going to be very, very crucial. Now, speaking of the 8 and 21, going to the daily chart, you can also kind of see just, that level of rejection here, right? Pretty painfully obvious. Obviously, can't get much more clear than that in my opinion. But again, it's not all bad news, right? What do we have? We have, of course, that 8 EMA, which is the top line of this, massive band, where the 21 EMA down here, 8 EMA up here. And we are finding support. We are finding support right where we needed to. It was, it was getting kind of close over here. I'm not going to lie, playing a bit of a dangerous game. But the point is the fact that Tesla still managed to close above that 8 EMA. So all hope is not lost for the bulls at all just yet. But like I said, if this ever does close below the 8 EMA, we should expect a probably pretty quick sell-off, honestly, in my opinion, down to the low 300s, in my opinion. But again, until that happens, there's no reason to overthink it and, go too crazy about that headspace right now and, cloud your thoughts with too many unnecessary thoughts really in general, because again, it has not happened yet. So let's wait until if or when it, of course, actually does. But watch for that moving forward on the daily chart as well. And then, of course, bring out the market bias. You can see the market bias is well below us. So again, if the correction does begin, I do expect us to come down to the market bias, which is sitting right in that sweet spot I've been talking about for quite some time. So that's why I think if the correction does happen, it'll be probably pretty quick. But this would actually line up phenomenally well, right? If we do get a correction, let's say Tesla does close below the 8 EMA, let's say it does begin the correction and it does have a sharp sell-off for whatever reason, and it does correct. Remember how I mentioned the whole time, my main level roughly that I want to buy at is about that 285, 286-ish level. That's the 618 Fibonacci retracement level. And that is also so far, assuming it happens, let's say within the next several days or so, that is lining up almost to perfection with my market bias. That is where I get interested. And that is where I will, be more willing to be a bit more aggressive on the stock, if you will. Up here, I'm not, I'm not as convinced up here. I'll be completely honest. I'm just simply not convinced. Now, maybe if we recapture 247 and 250 once again, okay, now I'm getting a little bit more convinced. I'm seeing some strength that I wanted to see. But especially where we are literally right now, you can argue the fact that the risk reward isn't too bad because, we're pretty much right above the 8 EMA, which is sitting at about 337, we'll just say, and we're at 338. So it's only about $1.50 or so of, risk versus potentially, even only if it goes up to 345, that's still a pretty decent risk versus reward setup, to be completely honest with you. But, I'm just not willing to play that game right now. I'm just kind of being patient with it. I'm playing other things, which AMD's being one of them right now. I'm not gonna lie. AMD's that's an interesting stock. I'm not gonna lie. That's a different beast of itself. But nonetheless, it's important to wait for those things. Now, other things we should mention, of course, is the MACD has officially, of course, crossed the bearish. I actually changed the settings slightly from yesterday. The settings I had yesterday were actually like this. So you can see you probably have like a double crossover now, which we do. But, I did the settings to the 28, which is the default settings. But I have this one on a slightly faster one. So the slow one is the same, but I did reduce the faster one. I think the default on this is like 12 or something like that. So again, my MACD settings are still custom, but they're pretty damn close to what they normally are. It's just I found that the other version I had with the 8 and the 21 had a little bit of false signals, especially on AMD, for instance. This is giving a little bit less false signals, but it's still a little bit faster than the traditional MACD. But nonetheless, the point is it did cross bearish. Not a great sign, especially when it's happening all the way up here. So you want to be a little bit careful about that, in my opinion. Doesn't mean it has to crash tomorrow or anything like that, but it is something worth, of course, mentioning. BX trender is still bearish. And what else is there to say? Of course, the band's regression is still, of course, in overbought territory. Not a whole lot to say there. I think there was one more. Oh yeah, the last thing I wanted to mention was, so yesterday we had that massive bearish engulfing, right? We mentioned this massive bearish engulfing candle, where yesterday's candle pretty much engulfed the day before that's candle almost fully, pretty much, right? Bearish engulfing candle. The issue that I don't like, now again, I want to make this clear, we're only red 0.11%. That's definitely nothing to be to write home about or be scared or anything like that. But nonetheless, the fact that we came up all the way here and still ended up closing red, and still, technically speaking, despite it not being by a whole lot whatsoever, still closed below yesterday's close, does put this bearish engulfing candle into a bit of a spotlight. It definitely puts it a bit more into a spotlight, and especially if we start closing red tomorrow as well, that becomes a little bit more concerning for me, because if we close red tomorrow, we most likely will close below the 8 EMA as well. But again, it does put this bearish engulfing a little bit into the spotlight a little bit more, simply because we closed red, even though it's hardly red, still technically below yesterday's close regardless. I'm not a fan of that. I'm not a fan of that. So that's why, again, with Tesla, I'm personally being very patient right now. I have my long-term shares. I don't really touch my long-term shares. I did trim, actually, I think on this initial run up back here around like 350 or something like that. I can't remember exactly where it was. I don't really track my long-term account very closely. I just sell and buy it, and I don't really, it just, I let it do its thing. I don't really watch it too closely, which honestly sometimes is for the better. But for the most part, I am still holding my long-term shares. I'm not, again, they're long-term for a reason, right? But if we do come back down to this level, like I said, all the way down here in the 280s, I will most likely re-add those shares I sold, and probably even add a few more, actually, because now I obviously am buying for a better price. But nonetheless, that's my overall analysis for Tesla. Taking a quick look at options flow. In terms of most bearish flow, Tesla is, of course, up there on the 20 million. Fucking MicroStrategy's all the way up at 100 million bearish flow. That's pretty insane. But nonetheless, Tesla is at 20, right? Which is definitely something, not to completely ignore, but nothing too crazy as well. And in terms of options flow over here, let's go ahead and get a refresh here very quickly, just to make sure we're getting the latest data, which we are. The bears are definitely starting to overwhelm. You can see the overall put flow that came in today actually increased and surpassed the overall call flow that came in as well, even throughout the day, let alone the confirmed closed, or the confirmed, I'm assuming, open bearish flow that's still, or options flow that's still open is more bearish. Overall, the flow today throughout the day was also more bearish. So the bulls are starting to either lose steam, or, all the bulls have set their, chess pieces in motion, and now they're just being patient and waiting for it to play out. I don't know which one it is, but all I'm going to say is the fact that, in my opinion, it really comes down to what breaks first, the 8 EMA, or about that 347 to 350 range. Which one breaks first? I guess we'll see, and we'll let it, decide for it. No reason to guess, and no reason to think which one. Nobody knows. You let it do its thing, and then you adjust and react accordingly. But all that being said, thanks for watching. See you tomorrow. Peace.